Did you know that one of the most common mistakes employees make on their taxes is to over-report the capital gain for shares they've acquired under the company's stock plan? In today's video, I'm going to talk about cost basis. What is it? What's the correct basis for equity awards? And what are 3 things you can do to help keep your employees from making this expensive mistake? So in the US, when you sell a capital asset like a stock, you are required to pay tax only on your net profit on the sale, not on your total sales proceeds. Your cost basis marks off what you paid for that asset, in this case stock, and then you deduct your cost basis from your total sales proceeds to determine what that net profit is that you have to pay tax on. For shares acquired under equity awards, the cost basis is comprised of 2 amounts. The first is the amount that the employee paid for the stock. And the second amount is the compensation income that the employee paid tax on in connection with the acquisition of that stock, or if it's a qualified arrangement, in connection with the sale of stock. The employee's already paid tax on that compensation income, so they shouldn't have to pay tax on it again when they report the sale on their tax return. So that all seems pretty straightforward, but where it gets a little bit tricky is when we get to Form 1099-B. In most cases, when employees sell stock, the broker is going to issue a Form 1099-B reporting that sale. And the 1099-B is going to include the net sales proceeds for the transaction and also the employee's cost basis. And the Form 1099-B is issued to both the employee and it's filed with the IRS. Now, for shares acquired under equity awards, the cost basis on Form 1099-B is almost always wrong. One reason it's wrong is because the IRS specifically prohibits brokers from including that compensation income in the basis reported on Form 1099-B. Now, that income is definitely part of the basis, but brokers are required to report only the amount paid for the stock on Form 1099-B. Another problem here is that brokers are only required to report a basis on Form 1099-B if the employee paid cash for the stock. If the shares were acquired under a restricted stock or an RSU award, the broker is not required to report a basis on Form 1099-B. Some brokers don't. Some brokers report a basis of 0. Some might report the fair market value as the basis. All of which is to say that if your employees are relying on the basis reported on Form 1099-B, there's a pretty good chance that basis is wrong and they are over-reporting their capital gain. So what's the fix here? Well, the fix is Form 8949. Employees need to complete this form, file it with their tax return, and on the form they will report an adjustment to their capital gain. That adjustment will be the amount of compensation income that should have been included in their basis, but wasn't. It's a negative adjustment, which means it's going to reduce the employee's capital gain or increase their capital loss. Now, it's clear why this is a concern for your employees, but I also think that for you as an employer, it's also something you should be concerned about. For one thing, the purpose of your equity plan is to compensate your employees, not to compensate the U.S. federal government. But in addition, if your employees end up paying over a large portion of their award proceeds to the IRS, they're probably not going to feel so great about their awards. And in fact, it can be a real disincentive for employees. So here are 3 things you can do to help your employees with this. The first is to find out what your designated broker's reporting procedures are and communicate that to your employees. There is actually a lot of variation in practice on this. Some brokers follow the IRS requirements, some don't. When it comes to restricted stock and units, there's a lot of variation in what the brokers are doing. And all of that confusion means that any resources your employees might rely on, like tax preparation software or other resources they might be looking to, those resources are often very, very vague about what to do about shares acquired under a stock plan. And that's because the authors of those resources don't necessarily know what the brokers are doing, and that makes it very hard for them to program a software or write instructions. You, however, are uniquely positioned to help your employees here. You can find out what your brokers are doing and communicate that to your employees. The second thing that you can do here is make sure your employees know that they need to report those sales on their tax return. If the broker issues a Form 1099-B, the employee absolutely has to report that sale, even if there's no taxable gain for the sale. The IRS is going to check. If they don't find that sale reported on the employee's tax return, they're going to automatically kick out an error notice to the employee. And getting an error notice from the IRS is stressful enough, but in this case, the notice is going to helpfully offer to fix the problem for the employee. But if the IRS fixes it, what they're going to rely on is the cost basis reported on Form 1099-B, and we already know that basis is likely to be wrong, and the employee is going to end up overpaying tax. So make sure the employees know that they need to file, that they need to include these sales on their tax return. And the third thing you can do is make sure employees know about Form 8949. Make sure they know that the way to correct this is to file an adjustment to their gain on Form 8949. So that's my quick take on cost basis. The NASPP has a whole host of resources to help you educate your employees on this. I've got cheat sheets, I've got tax reporting flowcharts, I've got a sample FAQ, I've got an annotated Form 8949. I have so many goodies to help you create your own educational materials that you can use to help your employees. Be sure to check them out on the NASPP website. And if you enjoyed my video today, be sure to subscribe to our YouTube channel so you get updates when we post new videos. Thanks for watching.